So today we'll be talking about scalping, scalping principle. Okay. Yeah, okay. Scalping principle. Now, when you switch over to the 1 hour time frame, you first of all you identify your trends, like you identify your trends, know the direction of the market. That's the first thing you should do. So let's say on the 1 hour time frame, okay, let me start with these substructures. But that's the key thing. On the 1 hour time frame, you'll be seeing moves like this. This is what you'll be seeing on the 1 hour time frame. But when you scale down to 5 minutes, let's say this is 1 hour, which one? Okay. This is a 1 hour. This is a 1 hour trend. Then 5 minutes, M5, M5, within M5, you'll be seeing things like this. Seeing things like this. Now, all these things you're seeing, it will be within 1 hour, somewhere here, something like this. So now, some other persons on the bigger time frame will be waiting for push like this. When you have the first high, low, high, and then you'll be waiting for mitigation around this area. Somewhere here. Oh, my drawings are bad. Waiting for mitigations around this area. Somewhere here. So you now wait for pullback. Pull back to the downside. Yeah. Then you buy. Now, this is your bigger time frame. This is just like your 1 hour. Your 1 hour. But then as a scalper, it means that it will take a lot of candles, a lot of hours before price will move up. Just that these days lately, you just see price will go up, come down, depending on the 1 hour time frame and all that. But then it will take longer time before price will pull to this place and start buying or selling. So sometimes people will say, oh, I have to wait all this while. That is why most people don't like concentrating on one pair. So they actually be looking out for more opportunities, like more buy opportunities or more sell opportunities on different assets. But then if you understand scalping a lot, then you can benefit from all these things. So let me just show you on the chart. So quickly. First of all, let me go back here. So let's use this one as we case study. So you're having on the 1 hour time frame. I don't go to 4 hours. I don't even go to daily time frame. Okay. I'm always either from the 1 hour, 15 minutes, 5 minutes, 3 minutes, 1 minute, seconds, and all that. So you have your high, or let's just use it as our high, our low, our high, our low, and our high. This is now the 1 hour perspective of it. Now, when you look at this stuff from the 1 hour perspective, as a day trader, immediately you have this push, like this push to the upside. You'll be waiting for price to pull down somewhere here before you now start buying, right? So when you start seeing this first leg, let's just say all this part hasn't happened. My trading view has expired, so I can't really do all those my replay tools and all that. But then let's just assume that all this place hasn't happened at all. So you're having this first push to the upside like this. It means that on the 1 hour time frame, it takes 1 hour for each candle to form. 1 hour for each candle to form. So it takes a lot of patience for you to wait. Okay, price move like this, come to this side, pull back before it mitigates me. Lot of hours. So let's confirm from this point to this point. You can see on our screen, it takes us 16 hours before price gets moves from this point to this point here. Yeah, 16 good hours, sometimes a day. Now, what happens? What will happen if actually you draw your POI here, you draw your POI here, you draw your POI here, and all your POIs? What will happen? You have to wait for some maybe 2 days before price will now return back your POI. So it means that from this point to this point, it takes you up to 16 hours or 24 hours for price to get moved from this point to this point. Now, let's check from the upside. Yeah, down to this. Okay, okay, down to this demand zone. That is 5 bars. It took us 5 good hours. So after 24 hours again, or 16 hours, you wait for 5 hours for price to tap into your zone. What if price decided to take off your zone? So all your weight is in vain. And then we had a mitigation with the upside. Now substructure. This first move you're seeing from this point, your swing low and your swing high. This is your swing low, this is your swing high. But then within this point, from this point to this point, market, both buyers and sellers, we have a lot of activities around this area from this point to this point. So let me delete this. Let me draw our swing point from here to here. So now let's scale down to 15 minutes. You can see the chart is getting more clearer. Let's just go straight to 1 minute. Price can really bring out the data here. Let me go back to 1 hour and use how much recent. So these are swing low and high on this on this point. So these are swing high and these are swing low. Let me write it down. Oh, swing high and swing low. Okay. You scale down to 15 minutes. You can see it's now clear. Scale down to 3 minutes. You can see the activities here. Scale down to 1 minute. Now, within this 1 minute now, remember what I said initially. I said from the biggest time frame, you're waiting for something like this. You push to the upside, then you now wait for price to pull back to this demand zone before price should move up. That is what I said from the bigger time frame. But then you now draw your range, your swing point or your swing high and your swing low. You draw and then you now start looking for entries within your POI, within your zone rather. Before I go into this, let me give you guys a point. So you're having something like this. You have something like this. Now, normally, these are swing low and these are swing high. So price move like this. So you're expecting a pullback to this point, mitigation, a break, a pullback before you enter. Our assumption. But then when you go to the 5 minutes or 1 minute, especially 1 minute, from here, just this first leg, before this first leg from this point to this point, on the 1 minute time frame, we see things like this, normal market structure. That is how you see it. Now let's go back to our charts and look at, remember that these are our swing low and these are swing high. But then just look at what market did. So market was trending down. Okay, moved up. Then we had a push here. This particular push you're seeing here is based on 15 seconds. So anytime you see an inside bar, it's a pullback on a smaller time frame or a lower time frame. So you had another pullback, then price, you had another pullback here, then price moved above this high. Yeah, that was our first break. Okay, so let me go back again. Now, price was giving us a series of lower high, lower low, lower high, lower low, lower high, lower low. Then price went above this high from this point. Oh, okay. So price went above this point, this zone from this point here. So we had a break here. Now all these activities is from your lower time frame 1 minute because you already draw your swing points. That is your the both swing points, your swing low and your swing high. So that is your area of focus for now. So we had a break of structure, and then price starting. Remember the principle of demand and supply. For demand zone, the last sell candle before the buy candle that breaks the structure. This is a break of structure here, the BOS around this zone because price went above our most recent high, and then price pulled back and gave us a mitigation 1 minute time frame. This is a mitigation. Let's calculate how many pips here. 2.2 pip SL. Okay, and then price pushed down from this point again, gave us a mitigation. Then we had a pullback. Then price came down again and broke this high, our most recent high again on the lower time frame. Remember, I said on the lower time frame, every high is important. You don't need to start seeing long candles. Sometimes something like this is a high, is an internal break for a mitigation. You see price will just move. So every structure is very important. So don't start looking out for I need something like this, something big. No, all structures are important on the lower time frame. So we had a break of structure here again. Let me write it down. Yes. We had a break of structure here, break of structure here. Then on the 15-minute time frame, let me not even talk about the 15 minutes. Let's just stick to 1 minute. And we had a break of structure here to the upside. So price went up. Yeah. And we're obviously expecting a pullback in this side before the final push. Now, in most classes I've taught you guys, I said there's always an information in the week. Anytime you see a week, there's an information. So anytime you see a week like this, either take the open of this week, either the open, which is here, or the 50%. How can you know the exact 50%? Use your gearbox again. Put it here. You have gotten the 50% of the week, which is here. Which is around 0.99594. So your entry for longs will be somewhere here. So SL will be slightly below it. That is it. So now price went up, pushed up, pushed down, mitigation, and moved up again. So how many? Let's calculate our previous sell again. Long positions and our entry is somewhere here. See? So roughly we're having 1.4 pip. So when you are scalping, remember, when you are scalping, the next supply zone, if you're buying, or the next demand zone, if you're selling, should be your TP1. So your target will be 17 pips. And then when you're trailing, sometimes when price moves like this, your SL will be somewhere here. And then there will be a pullback before the final push again. So you keep trailing it and maintaining it. Okay. Now we had another push to this side, a valid supply zone here, but there was no reaction. And then look at what price did again. Price was moving again. It was a pullback. Now the market wasn't clear around this, so no valid entry. Now remember, price went up, pulled back to this zone, gave us a mitigation of this zone here. So let me put it out so you guys will see it. Now, all these things is just within one particular swing high and low. Nothing like there's no magic. That is from this our swing low to our swing high. And then we had a break here. We had a break of structure here. We had a break of structure here. And these are our last sell candle before the buy candle that breaks the structure. We now draw it out again into the future. Now draw it again into the future for your entry. Then your entry will be somewhere here again for long positions. Yeah. So let's put it here. But then price went below it and also took out our stop loss here. Now market is still in line with the trend. We now had another break again. This was the first break. We have our internal pullback. This is our high, internal pullback, our low, and then now price moved again above this most recent high again to the upside, giving us a break of structure. So at this point, we're having a break of structure here. Now we're having a break of structure, an internal structure or a stop structure. Now remember, I said in every week is an information. So what would you do? This is the last second before the buy candle that breaks your internal structure in line with your trend. So you draw it out again into the future. Down position. You fix it. SL slightly below it, 2.7 pip SL. Again, remember, Your next target will be your next supply zone, which is this supply zone. How many pips? 24 pips. You're out of the market. Then you can choose to say, okay, fine, I want to stay. It depends. You can trail your SL to this point and watch out what the market will do. It's option like it's optional for you to do that. So for me, once I'm having 24 pip, sometimes I'm out of the market. That's the reason why I love using good lot size. Then from this point, remember that we're buying. So there's no valid entry at this level. So if you're trailing your SL, you can actually hold this trade to this point. Now let's go back to the 1 hour. Now if you notice, where's our swing low? Here's our swing low. And our swing high is here. But so far we're able to manage our trade to this last zone. And even if you want to look for more entries, you can still have more entries to that zone anywhere. But then at this level, let me show you guys again. Now we had another break. We had another break here before the push, right? Before the push here. Yeah. So where's our supply zone? Our last demand zone rather, the last second before the buy candidate breaks the structure. So these are our BOS. These are they brought this into the future. Now price failed to tap into this zone. So you don't force it. Now let me show another critical example again. Now all these things within our 1 minute time frame. What did I do? I actually draw my high and my low. I know that I'm trading within this range from this point to this point. So but on the 1 hour time frame, let me show you the 1 hour time frame range.
Oh, can I ask a question? Mm.
Okay, I can hear you.
Okay, on this swing high and the swing low, I have to from the swing high, from the swing low to the swing that swing high actually gives me can't really get it well.
I can't hear you properly. Your network is bad. I can't hear you properly. Your network is bad. Okay, let us go on. So if you still also want to like get some trades, you look for a swing low and your swing high. Let's say from this point to this point. But let me see. It's just that market will give me a lot of let me just let me see. Now look at this. So at this level on the 1 minute time frame, Remember that retracement and change of trend and all that always starts from lower time frame. It always starts from lower time frame. Okay. So I was having series of highs and lows at this level. From 5 minutes, I was having series of highs, low, high, low, high, low. And then price broke in structure to the downside. But it will be more clearer on 1 minute time frame. And look at it here. So I had two supply zones here, so I was trying to sell around this zone. First one matched me. I was risking just 1.4 pip SL. Second one, which was 3 pip SL, gave me some profit. And yeah, just 4 point something before smashing me out. Then, still within this 1 minute, I had I had a, I had a structural break, so market was still giving me highs and lows, highs and lows, highs and lows, highs and lows, highs and lows. Like price went above here. Then I had a mitigation here. But then this was based on second time frame, this particular end frame. Okay, yes, it's also clear on the 1 minute. So this is it. So I had a break of structure to the upside and then price broke this low, which is there. I had a break of structure here. I remember I said something. I said there's always information in the week. Always. Now look at price starting this week here. So I was having 1.3 big SL. And it's just simple. Immediately you see a change of character on the lower time frame, the first break, I draw my zone, I set my pending order. I told you guys my next supply zone or demand zone is my TP. What's TP? Was 15.5 p. Now, why is scalping good? One is because when other persons are waiting for the bigger move to happen, we're waiting for 1 hour, by 2 o'clock we're trading, by 3 o'clock we're trading. You always have opportunities to make money from the financial market. So what did I do? After immediately price mitigated this zone, went down. And I saw something here. Immediately I switched over to 15 seconds. I had an internal break. The break was even somewhere here from the 15 seconds time frame. And then look at my stop loss. My stop loss was 0.9 p SL. So immediately price starting. This was one particular trade I was using 10 standard lots and I was risking I was risking nothing. I was risking less than I was risking 90 is it 90 point something dollars in this particular trade using 10 standard lot. And my target was just 10 pips, meaning 10 pips is $2,000. I think so. Yeah, it was 5 pips is okay. 5 pips is 1K. Yeah, or yeah, I think it's $1,000 or so. But then I took this trade from this point and the trade was still falling and I had a decent push again. So I was actually trailing actually to somewhere here before we had a reversal. Now look at what price did again. From this point, we had a now break again to the upside. The break was also to the upside. Then price respected this demand zone here. And now there's what we call the premium and discount. I use it as an additional confidence for myself. And let me show you guys from this swing low to this swing high. Now, this is your discount level. This is your premium level. You sell at premium, you buy at discount. So there's nothing on earth, even if I'm seeing the last sell candle before the buy candle, in my premium zone, I won't buy. I will just wait for it to come down. So that is the reason why I would definitely choose this zone. This zone here. See how price respected it and pushed again. Let me give you another instance again. Premium, this is your swing low and this is your swing high, right? Even if the last sell candle here before the buy candle, I won't buy here. I'll buy at discount level. Price respected it again. Again. Boom. Touched. So it's just applicable everywhere. Now, look at what price did. Price was moving again, giving us series of highs, low, high, low. And we had a break of structure here, right? A break of structure here. Now, see what happened. Where is your swing high and your swing low? From this point to this point. Where is your discount and premium? Premium and discount. So even if you see the last second before the buy candle here, you're not buying. So you wait for price. Price will tap into your zone here, and you're good to go. Why? Based on this 1 minute break. So let's see how many. What's your target from this level? Your target will be 2.2 pip SL, and you have gotten 33 pips. Even if it's 30 pips, two standard lots, $600. Again, we're having another premium and discount. Your swing low and your swing high. Now let me show you guys something. Now some persons want to buy here, and after buying a little, price will just mitigate and dump you guys. But look at, you buy from your discount level. So in a lower time frame, you use your most extreme. Use your zone again. Take your buy opportunity. You buy to your next supply zone. Remember, I said to your next supply zone or demand zone. Now, if you look at it from this perspective, price was giving us high, then we had a break. This is a pullback here, so we had a break from this point. Then price mitigated this supply zone from the lower time frame and then pushed to our demand zone. That is the reason why sometimes you see on my chart I buy and sell. Because immediately I see something like this again, I sell to this demand zone. I also buy to the supply zone. Now, buying from this zone again, I'll still look for buy opportunity again to this supply zone. Simple, then sell again. Now, before you know it, at the end of the day, you're out from here to here, 30 pips. Now again, from this supply zone to this demand zone, 28 pips. Another move again from this zone here, the open of the candle. Again, 24 pips. So even if you have one or two losses, you just be catching trades up and down, up and down. Now look at, we had another break to the upside again. Let's use the premium and discount level. Now, this is a very perfect example. Can you see that we had the last second before the buy candle that breaks the structure? But sorry guys, but based on our discount and premium level, these are premium, you sell at premium level. So for those who are doing crypto now, you buy low and you buy low and sell high or something like that. So these are discount and these are premium level. We draw this into the future again. Last second before the buy candle that breaks the structure. You might be wondering, where is the structure? This is your structure. Internal structure. This is a 1 minute time frame. Again, let's see how many pips are you going to achieve. 21 pips, $200 using one standard lot. And all these things happen in minutes. That is what Chess King is doing, no? Just in minutes. That's 1 minute, 10 minutes, 20 minutes, you're out of the market. Can you see? Now again, Let me show you more examples. More examples. Swing low, swing high. So there's no buying opportunities for me around there. So there's one here, but not really decent. So it must always be in line with the trend. Now we had series of lows and high. Price failed to break this high, broke structure, down, down. So what did I do? I draw this stuff into the future again, into the future. So let's use it as a premium and discount. At this level, I'll not be looking out for buy opportunities. So I was actually looking for sell opportunities. So I drew this into the future. First supply zone, second supply zone. This first one was 2.4, took me out. And let's check the second entry. 2.4 again. And we had a decent sell opportunities. I took this particular trade. This trade happened around 2:15. Eastern section. 2:15. So I had a decent 10, 30, I think I got over 30 pips. But then let me show you the exact time it happened. For the time. So you see? So much in September, 16 September 2022, 2:15 a.m. at night. Had a very decent move from this point to this point. And anytime I'm trading the lower time frame, in my head I picture my bigger time frame. I know my supply zones where they are. I know my targets. So I don't allow that to like just take me off. Now I was having other POIs here. POIs here. So judging from what I just showed you guys, we had our high and our low. So at this level, I was supposed to be selling from this point here, from this point. So I lost this trade. I lost this particular trade this zone. So I had two losses here. And guess what? I took this trade from this point. That was, I think Frank asked me this stuff in my DM about this particular trade from here. Then I got to this point here because I knew that there was a demand zone. So I said always use the demand zone as your TP or your supply zone as your first TP. So I took my profit at 22.4. Yeah. Then I looked for a very decent opportunity again to get into this trade. Now remember that we had a break of structure here. Now, judging from premium and discount principle, is my swing low and high. This point. Now, this is your premium. You sell at premium, you buy at discount. So price was already in my discount area. So perfect opportunity to buy. Can you see? Reason for the buy. Then this other buy opportunities here, I saw a crazy break of structure during our 15 minutes, 15 seconds time frame, and I took it. I was having an internal break, which is this point here, but it was more clearer on the 15 seconds. This was 1.1 PSL. This is still 1.1 PSL2. Then price officially tapped into our zone. Now, for those who are always asking for confirmatory entry, price, let me show you guys confirmatory entry. This is your POI. This is your POI. Simple. You allow price will move. Price tap into your, okay, let me do this one. Price tap into your zone. Some of you use risk entry. Then the best thing you need to do is that you wait for your most recent low. For an uptrend, you wait for your most recent low to be broken. For a downtrend, trend, you wait for your most recent high to be broken. Now we had our most recent low, which is this point. So we're waiting for something like this. Break, pull back, and you sell. Perfect example. There must be a break here, and also a break to the downside. Then mitigation. Yeah, mitigation. Yeah. So let me show you the example. So this was my supply zone from 1 hour time frame. Supply zone. Price tap into my zone. Tapped in first tap, first touch into it, and I just went straight to 15 seconds. I think I missed this trade by 0.15 because my SL was 0.4, 0.4 PPSL. But let me just say I was just greedy enough. Sha. And second one was also 0.4. But then, assuming I took this trade from this point here, the whole of this week, this candle here, let me measure it. Just look like something quick. I guess the reach to the reward. Let me show you guys. Mad reach to the reward from here. 27 pip. If I'm even taking it down, at least it's 30, 34. Mad reach to the reward. But if I actually wanted to get into this trade, so very easy. I had another break of structure. All these things I'm showing you guys, 1 minute time frame. Another break of structure here. Last sell candle before the last buy candle before the second candle that breaks the structure. Put your entry. The most recent sub demand zone. How many pips are you seeing? 2 pips. Simple. Urgent 20 pips. You understand? Urgent 20 pips. We're done for the day. Can you see? Then now price tapped in our overall demand zone, which is here. Which is here. Price tapped in. Another confirmatory entry for the buy. Oh, another confirmation entry for the buy. So you allow price to tap in. Remember that market was selling. So our most recent high was broken, which is this place I wrote the POS. Immediately price broke the structure to the upside. We had the last second before the buy count that break the structure. You drag it into the future and you put your entry. So you put your entry. Next what demand zone, next supply zone as your TP. 1.7p SL. And you see all these things are being done on the lower time frame. There's no magic to all those things. It's just there. Okay. So you can this pastor. You can ask your questions, guys. So
Good evening. Good morning. Is it morning?
guys, morning.
Okay. So that break of structure, like to confirm a break of structure, must it be the body of the candle
Must
out
be
of
the
the
it must be the
it
body
must be
close of the candle.
okay, close.
Yeah, the candle must break it properly. Then
You mean
when you see wicks, it simply means that sometimes it's liquidity grab, so you should be very careful. So I suggest you use full body close of the candle.
okay? Assuming you have a week on probably 15 minutes, it will be like body.
You scale down to smaller time frame and you see the clear break there.
Okay. So what you are saying in nutshell, as low as the lower time frame, we should just go to the lower time, check properly.
Yeah, you check properly and you see it properly.
Okay, sorry. Good morning.
Good morning.
My own message, my own question is that, oh, like you did on the
I can't hear you.
Good.
Yeah, good morning.
Uh, Hello. Okay.
Yeah, good morning.
Please, is there a special setting for the premium and premium tools we are using to draw the demand zone and supply zone? Is there a setting for it?
Demand zone and okay. You go to
The tool we are using.
your
Yes.
gearbox, you click on
Yes.
gearbox, you click
Okay.
and for me settings, you
Okay.
click on
Yeah. Can we screenshot the settings? Your own settings, please.
yeah, go feel free.
Okay. Okay. Thank you very much. Mm. Okay.
sorry, can you just check the chat box? I typed the message there.
Now someone is asking Edwin, you're asking my question is can I draw okay, sorry, let me start from the beginning. Is how do you draw how do you trade from a swing high to a single? I just explained it in the group already. That's what I explained. You can still go back to that is what I explained.
Sorry, I wasn't really understanding it. That was why I was asking the question. Once you've drawn the highs and you've identified the highs and the low, and let's say the price is in between the high and the low, like how do one react? Like
That is what I said. When you
how
draw
do-
your high, when you you're taking us back home. See, when you go to your 1 hour, now look at on my 1 hour time frame, this is your low, this is your high. Do you understand? You simply go to
yes,
one
yes,
minute. Just go to 1 minute.
mm,
You know that market will want to push from this low to this high, isn't it? Start looking
yes,
for
yes.
break or structure to the upside. Higher high, higher low, higher high, higher low, higher high, higher low. Can you see?
Okay. Mm,
Market is giving a series of highs and lows, highs and lows, highs and lows. So the more you're seeing your last second before the buy candle that breaks structure within your premium zone or discount between your discount zone, you take your buy opportunities because we all know that we are buying to this high,
yes, the previous high,
the previous high.
the high
So
identified on the high
yeah,
identified on the higher time frame.
yeah, that does it.
Good
Then the
morning.
next
Good
person
morning,
said,
bro.
"I'm coming. Let me read out this stuff.
All right.
Good morning, good evening, boss. I want you to guide me further. It's morning, okay? Maybe you send a message. Actually, I don't understand. Ajay. Now my question is this: How do you? My
Boss,
question
good
is:
evening. Boss, please, how do I send the message? How do I
I'm
reach out
in
to you?
I'm in the general group. You can just search for Briley, or someone will tag me or anything.
Okay.
All right.
I don't think I'm the general group boss.
Wow. Okay. Hold on. So that is the number. You can see my screen. I just sent my number, so um,
Okay. So the next question is now my question is
Hello, sir. Hello, sir. Good morning, sir.
yeah, good morning. Sorry, let me just answer this
Hello, sir. Good
question.
morning.
Yeah, good morning. Hold on, let
Yes.
me just answer these questions, okay? Now my question is can I draw out the zone on 15 minutes and enter on 1 minute? Yes, you can draw out your zones even on 5 minutes and enter on 1 minute. And if you have the seconds time frame, you can enter. But these things you have to practice it. You have to practice it on your demo account. Be conversant with your trading view and practice it on your demo account before you try it on a live account. Be conversant with it. Don't go and use your real money and start doing all that. Then the next person said, please, how can you do stacking with stacking with this and explain market section? I think market section is out of the contents here, actually. But then, how can you do stacking? I actually don't do all those stacking of it. I really don't do that. What is the need of you opening multiple positions? Okay, what do you really benefit from stacking your positions when you can actually use one position to achieve what you want? But then, if you're on the chart, these are more like re-entries. So let's say you took first position and the first position here, first entry, second entry is enough. You don't. It's not about you opening multiple positions that will make you to make money. It depends on your account size and your trading styles. But honestly, supply and demand traders or smart money traders, we don't encourage these things you're asking. Then for market section, we have the London section, Sydney section, New York section, Frankfurt section. Nigerian time, London section is 8 a.m. Eastern section is always from 1 to 6 or to 7 o'clock. Then Frankfurt section is from 7 a.m. to 8 o'clock. So you choose what is best for you. Some traders they love trading London section. Some of them is New York section. Like New York section starts from 1 o'clock or 1:30 to 3 o'clock to 4 o'clock, depending on whenever you want to be done with your trading. But the market moves from morning till even 9 o'clock to 10 o'clock. So, but I don't advise anybody. According to our boss Enoch, he said you shouldn't be a slave to the chart. So I want to advise someone to like stick to the chart always. So once you're done for the day, I know a lot of traders that only trade London sections, and there are some persons that trade New York sections, some persons Asian section and all that. So it's dependent. Hey, Jake, can I have your number? Okay, I've sent the number already. Thanks for this section. Does this really applies on all pairs? Yes, you can do it even on crypto. Anything you want to do it. I'll send the settings. I'll send the settings to the group. It's very easy.
Good morning,
I
sir.
discover. I'm coming. I discover you trade EU the most. Is there any reason for that? Do you check dollar index before trading? I do check dollar index before trading before. But since I have this knowledge about market structure and how market moves and all that, I really don't pay attention again before I was actually doing it. But right now, I don't pay attention to dollar index. Now the funny thing is this: dollar index is the direct opposite of EU. Turn it upside down, you'll be seeing EU replicating same results. So I really don't have time for it. I don't want anything that will make me like that will stress me. And then I discovered that you trade only EU because I love EU. I want to be the king of EU. So that is it. There's nothing attached to it. You can decide to start trading GBP, JPY, or any other pair. It's optional. It's up to you. So, any other questions you can ask?
My
Hello,
question is,
bro.
apart
Okay.
of uh, apart of the gambos, which other tools can we use to measure the premium and discount?
That is the only tool I use. I don't really know of any other tool. But then you can go on YouTube. It's very easy. Type on trading view tutorials and they'll give you all the breakdowns of all the tools you need to use for trading. So it's very easy. Some videos are about 31 minutes and you can use that to you can even know more you can even know more tools than me using trading view. So
Yeah,
it's
of
some
course
stuff.
now. Because
Hello,
me,
bro.
sometimes I try people replacement. Yeah, will not share with you.
But why do you need that? See, first of all, I used to say something. If there's an instruction in the group for you to follow a particular thing, stop making things to be complicated for yourself. I've tested Fibonacci retracement, I know divergence, I know most of all these things, but we decided to give you guys specific knowledge that you need. So why complicating issues for yourself? Well, if you still want to add Fibonacci retracement through, fine,
I
make
will
your
not add
findings on
now.
it.
I
No,
got
you can
boss
add it,
stress.
it's up to you.
No, I better no fit carry am. I no know book.
Please help me. How do I identify this swing low and swing high?
Just it's just simple. Just go to your 1 hour time frame. Just like you see, you're seeing this. This is your high, this is your low, right? High and low. What made this push to the upside? This is the point here. From this point to this point, this is your swing low, this is your swing high. Before this point to be confirmed a swing low, there must be a pullback. So market shouldn't just be going like this and you say, there's a swing high here. No, there must be a pullback before you can consider this place a swing high or swing low. So this is your swing low, this is your swing high. If you look at the chart now, you can see swing low, swing high because we had a pullback. Swing low, swing high because we had a pullback. Swing low, swing high, swing low, swing high, swing high, like swing low and swing high. So you taking the last, how will I even say it? Just like your higher high and your higher low. Do you understand? Your lower high and your lower low. Just draw it. That is your swing high and swing low. Some other traders call it range. Your trading range simply means the area that you want to be trading at that moment before market will start giving other pullback and main moves and all that.
Thank you. Thank you.
Uh,
Hello, sir. Hello, sir.
yeah, I can hear you.
Hello, sir.
I can hear you.
Yeah. Please, kindly check the info messages. I've sent the message. Please, kindly let me try to check it.
All right, sir. So please, I'm a new beginner.
Thank you.
Just joined Forex on Saturday. All this looks so strange to me. Don't understand. Please, where can I start before reaching to this market structure? Please, I really need your guidance. Also, the signal group, I can't find it. All right, I think Boss Frank will attend to that about the signal group. And you have to start from the basics. What is Forex? What is Forex? What is pips? What is leverage? What is margin call, equity, lot sizes, and how to calculate your pips and all that. But what I'll do is this: if there's no video in the Telegram group pertaining that, I will look for a link and send to you just a beginner class stuff so that you'll be able to follow suit on that. I think that would be very easy for you.
Sorry, no vex, I beg. Hello.
Yeah, I can hear you.
Yeah, sorry, Sha, because I've been trying to like replicate what you told me on that swing high and the swing low. I have a chart here already that shows the low and the high on the 1 hour. Sorry, if I'm to confirm the high and the low on my own, you understand? Uh, do I need to like observe the break of structure before it or something like that? I don't know if you are getting what I'm saying.
No, I just explained this thing just now when Divine asked the question. That's the reason why anytime someone is asking a question, don't assume that you already know it. Now, I
I
said,
was the one that asked previously
no,
also.
no, no, no. Divine asked the question before you're asking the same thing, before you started asking the
Okay,
same thing.
okay, I didn't hear. Sorry.
Now, price is giving you series of highs and lows. Do you understand? This is your higher
Yeah,
high, this is your higher low. Do you understand? So your swing high and
yeah.
your swing low is your higher low, and your higher high is your swing high and your swing low. high, low. Now, the reason why I was actually showing you guys this stuff, because sometimes you'll be waiting for break of structure, pullback, and all this weight and all that. Now, I'm only saying that from this point to this point, you'll be seeing market will be moving this way. You'll be seeing series of break of structure. You understand? Something like this. So with it, from this point to this point, when you're waiting for from this point to this point, you see you definitely have opportunities for you to buy to the upside or sell to the downside before your main move from the bigger time frame. That is the reason why sometimes when you guys are in the group, you're waiting for one particular move. I'll be on the lower time frame catching pips and you'll be surprised. So this is just the secret, nothing else. You draw your swing low and your swing high. You switch over to 1 minute or 3 minutes, any time frame that you know is convenient for you, especially from 5 minutes to 3 minutes and 1 minute. Then you start looking out for break of structure either to the upside or to the downside. You look for your supply zone or your demand zone and place your